What a day! I've potentially witnessed the greatest trade of all time today by one of our very own legends. Welcome back all you legends, and let's get right into this video. The stock market today, guys, is up 2.6% on the S&P, 2.23% on the Nasdaq, and 2.83% on the Dow. Let's take a look at the sectors and look at that. Leading energy, financials, and technology, a full-on risk-on day. Let's take a look at the stock market map, and green all over the place. It's just a sea of green, and we've seen this before. And not only have we seen all of this before, but we've also called it before. This was not the first time that we called a bottom and got a face-ripping rally just the next day. Let's jump to the daily chart of the S&P 500, and in this video, everybody, I'm going to go through every single signal that I used yesterday to spot this bottom and how you can do it to spot face-ripping rallies just like this one before they happen. Just yesterday, everybody, we said the market was bottoming, a massive rally is coming, this is the final crash. I highly encourage you to go and watch that video. I go into detail into every single bullish signal that we spotted just before this face-ripping rally, warning us that yes, this is a market that's bottoming and we're going to get a face-ripping short squeeze rally. Now, this isn't the first time that we spotted a bottom using the same indicators. We spotted another bottom just a couple of weeks ago. Right here, we spotted this bottom using the same indicators, everybody. And then we spotted this bottom as well, relying largely on the same indicators, but it is worthy of note that indicators were significantly more bullish heading into today. Just as everybody's been expecting the market to see a waterfall sell-off, a 2008 style crash, the technicals simply said no. Let's start off with the Fibonacci retracement levels, everybody. This is the 50% Fibonacci retracement level that I talked about yesterday. And I did say yesterday that I was expecting the market to tag this 50% retracement level and rally, and that's exactly what happened. It's so uncanny. It's absolutely nuts how the market followed our playbook from yesterday exactly to the T. We gapped down on mixed CPI results, on mixed inflation figures, right? We had a high core reading, a higher than expected core reading at 6.6, and a headline inflation that's in line at 8.2. And if you're part of this legendary trading community, this was no surprise at all because I actually talked about this in the trading community last week. Look at this, everybody. This is the headline and core CPI forecast for next week, a mixed result with core coming in hotter and headline cooling down. It's going to be a major market moving event next Thursday. It's handy to know our numbers before everyone else. I posted this in the trading community just a week ago. By the way, everyone, this is what the trading community looks like. It's less than 20 bucks a month if you sign up for the annual membership, and I post every single trade and investment that I make in real time, as well as daily real-time technical analysis and a bunch of other cool stuff, including investment ideas, trade ideas, learning resources, weekly watch lists, weekly expected moves, an expansive catalog of technical signals that I rarely go through in the videos, some of which I've never actually shared. I just share exclusively with the members. I also post exclusive member-only videos explaining specific trades and going through my exact chart setup for some of the most complex technical indicators to set up on TradingView. We also have a members section where our legendary members can share news, investment ideas, trade ideas, futures, crypto, and Forex, as well as ask any question they want, and I'll answer it no matter what, the best I can. Again, here's an example of a post that I made today just before the market opened. By the way, guys, I'm at UTC +3, so the market opens for me at 4:30 p.m. So this was 30 minutes before the market opened. And here's what I said. Now we wait for the real money market to open and see the reaction. I expect buying off this level. I'm not going to be shorting here. We've just tagged the 50% retracement level from the pandemic low that I referenced in yesterday's video, which was this line right here that we tagged and ran. And that's pretty much what we expected today. If you caught this move to the upside, congratulations, you've made a lot of money. And that includes our very own legendary members. This is potentially one of the greatest trades of all time that I've ever seen. We're talking about 5,000%, that's 50x. and over 10,000% in profit just from a day trade today. This definitely goes to the Hall of Fame for being one, if not the greatest trade of all time. To put things into perspective, everybody, if you put in $10,000 in this trade, you would have made over $1 million. Life-changing money. I just feel so happy when I see people making money. These are all their trades. I take zero credit for this. It's absolutely their trades, their entries, their exits. They took the risk and they made the money. Here's another member that made over $8,000 today. Amazing, 400%, a 5x gain in a single day. There are loads and loads of these guys. I'm just sharing a few in this video. Here's another one of our resident legends who has made again over 400%, over $8,000 in a single day. Amazing trade, absolutely amazing trades. I need a round of applause for the amount of amazing trades that I've seen today in the trading community. Another absolutely amazing trade was this. Locked in another 25 years worth of Money Time Machine subscription. This legend made over $5,000. Another one made over $8,000. So if you read the charts, if you took a look at the indicators and you knew what you were doing and you saw this coming, this was life-changing money in a single day. Now, obviously, this channel is all about life-changing money and teaching you, everybody, how you can do it on your own. You don't need to join the trading community. It's just the best and fastest way to get there, in my opinion. And it's also the only way I make anything out of this, everybody. I don't actually make any money off the channel. It's not a monetized channel. The ads that you see on the videos, YouTube keeps 100% of that revenue. So if you want to support me, the best way you can do it is by joining the trading community. And you get to be a part of the best, the most legendary trading community on earth. And I absolutely 100% mean that. So let's get right into the technical signals. Now, the first signal that I was looking at yesterday and I talked about, everybody, was the 50% retracement level. We tagged that today. And I was also looking at the 200 weekly moving average. Again, a weekly moving average where we've seen a lot of buying in the past. I pointed this out many times before, not just in yesterday's video. But a lot of bulls, a bus load of bulls were waiting for this level to get tagged, the 50% retracement level and the 200 weekly moving average, to load up on long positions to buy up every single share out there. Now, in terms of what's going to happen next, everybody, I expect this rally to continue to rip and rip, going back at least to retest this $380 level and potentially moving even higher into the $390 level, a key resistance zone that we've seen act as support, resistance, and support. So it's a key pivot zone. And if we get there this month, I expect the rally to fail at 390. If we get there, if we don't fail at 380, and begin to sell off again for that final crash that I talked about yesterday. Now, this next leg of selling could take out this low or retest it, or we could simply make a higher low and begin a new uptrend. That's going to depend entirely on fundamentals, not technicals. And I'm talking about company earnings. We're going to see a lot of companies come out with their earnings reports in the last week of October, and that week tends to be one of the weakest weeks, seasonally speaking, in the entire year. And so let's pull up our handy seasonality chart, and this is what I was talking about yesterday, everybody. I said that we will see a bottom and a face-ripping relief rally, and then we're going to see the second dump, the final crash, in the last third of October. And so what we are planning to do, everybody, is ride this move to the upside and then look for technicals again, for signals indicating a local top to take profits and switch to being more cautious and potentially positioning for this last leg of selling. This second dump, in my humble opinion, will be the low for the year. We will have established the low for 2022, but not the end of the bear market. I expect even more pain next year, and I expect all of these lows to be taken out next year. So again, this will be a tradable bottom, the low for the year, but not the low for the bear market or the end of a bear market. We still have ways to go before that happens. We need to see a fundamental shift by the Fed. We need to see inflation coming down and the Fed pivoting and that will be the low and the end of the bear market. And I suspect that we will have to wait for another year before that happens. If you've been following this channel for long enough, you will know that this is one of my favorite signals of all time, the smart money and dumb money. Smart money up top, the HYG, the high yield bonds, and dumb money down below. I track divergences on this chart, everybody, both bullish and bearish divergences. And we did track two bullish divergences just in the last couple of weeks. The first was this one where the HYG was making higher lows and the S&P was making lower lows. Again, alerting us that there was a nice relief rally coming, and that's when I called the bottom here, just a day before it happened. And again, I saw the same thing, everybody, developing over the last few days. We had the S&P making lower lows and the HYG making higher lows. This signal also allowed us to catch this top exactly, and that's where we entered our short position in the trading community, and we wrote it down. We made 100% profit on the way down. We took profits here, and then we entered again and made another 100% in profit using very, very conservative vertical option spreads. Now again, guys, if you're interested in following every single trade that I make, please check out the link in the description to join our trading community. Another chart that I was looking at is this. I even left the drawings from yesterday up, and it was this, everybody, the VIX up top, the fear index, the volatility index, and I pointed this out, everybody. We were making lower highs on the VIX as the S&P 500 was making lower lows, indicating that volatility was dying out. We had a confirmation candle today, that full-bodied bearish candle on the VIX, indicating that yes, volatility is topping in this double topping formation and is cooling down, and it's allowed this massive rally to happen. Again, we had a double top on the PPO with a lower high, confirming a bearish divergence in volatility, indicating that volatility is going down. And whenever volatility cools down, the S&P 500 rallies. I pointed this out yesterday in the May low and in the February and March lows, where the S&P 500 had nice relief rallies. Another indicator that I was looking at, everybody, was the dollar index. And again, just look at this. I left it from yesterday. I pointed out, yes, PPO was pointing down. We were heading for a rejection. This looked like a double top formation with a bearish divergence. And the dollar was cooling down, again allowing the stock market to rally. Same thing here, guys, on the 10-year yield. The 10-year yield looks like it wants to top. It has a double top formation, higher high on the price action, and a lower high on the PPO. Again, a classic topping formation with a bearish divergence on the momentum. Another chart that I talked about was gold, everybody. Up top is gold, down below is the S&P 500. And look at this, everybody. Every single time we had a bullish divergence, the S&P 500 had a nice relief rally. Follow that. And the rally typically lasts until we get a bearish crossover. And so we did not get that today, and that indicates that yes, more upside is coming for the S&P 500. Another chart that I looked at, everybody, was this up top is the gold divided by S&P 500. It's a ratio chart that I look at to track risk on and risk off, meaning if big money is moving into risk assets like the S&P 500 and dumping safety assets like gold, like the dollar, and like bonds. And so again, I pointed out that every single time we had a bearish crossover on the PPO, the S&P 500 rallied, because that indicated that the S&P 500 was beginning to outperform gold. Again, indicating that money is flowing out of gold as a safety asset and into risk assets like the S&P 500, fueling a risk-on relief rally. Now, I did not bring up this chart in yesterday's video, but I did share it in the trading community, and it's the CPC put to call ratio buy and sell signal. This is my own signal. I've developed this over weeks and weeks and weeks, trying to refine it the best way I can. And I eventually figured it out, and I shared this buy and sell signal, and I made a member exclusive video on how to set it up in the trading community, because it's really complicated to set this up correctly. And here's how to read it, everybody. Let me add the S&P 500 on here just to see what I'm talking about. Now, the CPC, the put to call ratio, everybody, is a contrarian indicator. When it's moving up, the stock market moves down. When it cools down, the stock market moves up. Down below is a special PPO formula that I worked on specifically for this signal. And whenever we get a bullish crossover on the PPO, it indicates a massive sell-off coming and a confirmed sell signal. And whenever we get a bearish crossover on the PPO, it indicates a relief rally, just like what we had in the June bottom and in the May bottom. Now, for a confirmed signal, a crossover is not enough. We need to see the CPC trading below 95 and then cross over and a bullish crossover, and that would confirm a sell signal. For a buy signal, everybody, we need to see the CPC trading above 1.1. We need to see it cross down, and then for the PPO to cross down as well. So we need to see both. We need to see a cross between 95 and 1.1, as well as a crossover on the PPO. We need both for a confirmed signal, and we did get a confirmed buy signal right here on October 5th, and this signal continues to be active. So everybody, based on everything we know, including seasonality, including the earnings calendar and the economic calendar for October, I'm expecting this relief rally to continue into next week, and for a topping formation to begin taking place sometime next week, perhaps early the week after, and for selling to commence, for volatility at least to come back into the market as big earnings start to come out in the last week of October. At that point, it's anybody's guess whether we're going to make a higher low and begin a new uptrend, or whether we're going to retest this low, or whether we're going to take it out and go all the way down to $330 to the bottom of this consolidation zone that I've been talking about for weeks and weeks now. Tomorrow, everybody, we're going to have the retail sales as well as the Michigan consumer sentiment. And most importantly, everybody, tomorrow we'll have a lot of banks reporting earnings, and banks are the bellwether for recession. And actually, I expect banks to perform better than feared, simply because interest rates have risen up so much. And as interest rates rise, banks make a lot of money. So as of right now, I expect the rally to continue. We might see some pullbacks here and there, some choppiness, but overall, I expect the rally to continue into next week. And before I close out this video, I'd like to thank everybody who's been supporting me since day one. This channel has grown so fast, and we have the best community bar none in the whole of YouTube. And I have all of you legends to thank. So thank you so much. And that's all I have for you today, everybody. I'll catch you in the next one. Love you all. Bye-bye.